Investors in Canada, plenty of choices when it comes to ETFs. There are hundreds on the TSX. South of the border, there are thousands of ETFs on U.S. exchanges. Some investors prefer to purchase U.S.-listed ETFs as they tend to be cheaper in terms of expenses or management fees. But according to Invesco, there are benefits for Canadians owning Canadian-listed ETFs, and they outweigh disadvantages. We're joined by Pat Chiefalo, Senior VP and Head of ETFs and Index Strategies at Invesco Canada. So tell us what you're doing. You guys are launching ETFs in Canada that are very similar to ones that are in the States, essentially the same product?
That's right. And we do both. We'll launch sort of domestic ETFs that are their own strategies. But when we have some really unique opportunities in U.S., some products that we feel could really benefit Canadian investors, we then list them in Canada. They're provided under the Canadian regulatory regime, which we think just adds a huge amount of benefit to investors. And so, yeah, we bring those strategies up north, we list them domestically, and we offer them to Canadian investors.
But will these, in some cases, have higher expenses?
They might. They might have higher expenses, but these are overall superly efficiently priced products. So on the whole, they're really low kind of expense ratios as a whole. And we have to have a little bit more infrastructure when we bring them up north and when we list them in Canada. The servicing angle, the legal angle, there's an additional cost that we incur by bringing those up north. So yeah, those are marginally a little bit more expensive than when you see in the US. But in areas that, the recent ones we've brought up, the returns and the opportunity far outweigh any modest kind of increase that we would have to impose.
One product, and we can't get into detail, but is the Invesco Russell 1000 Dynamic Multi-Factor Index ETF.
Yes, a mouthful.
I know these things come with big names. Just tell us briefly, what does that one do? What is the Russell 1000?
So the Russell 1000 is a group of equities in the U.S., essentially some of the largest companies in the U.S. This product, without being sensational, has been one that I'm most excited about launching in a very long time that I've ever been a part of. It has the opportunity to achieve significant outperformance relative to its benchmark, which is relative to a basket of U.S. equities. It's had very consistent performance over a 5-year period. There's injection of Invesco IP. It leverages factors. It's not a factor ETF per se, but it leverages factors to produce its output. But it really provides investors an opportunity in the core of their U.S. equity portfolio to have something that could really drive incremental returns above more traditional benchmarks.
What do you mean leverage factors?
So it uses factors, things like value, size, you've heard of this stuff, momentum, quality. These are things that represent stocks in various aspects of ways. Now, this is really what I would call a next generation or an evolved way of looking at factors. Traditionally, the way investors have gained access to factors is because the ETF either gives you that value, gives you that momentum, or packages it up a certain way. What we're doing here is first we're starting with some Invesco IP to assess the market conditions. What does it look like? Economics, leading indicators. Where in the market cycle are we? And we essentially have 4. We have recovery, we have growth, we have potential slowdown, and then we have contraction. After assessing that, we figure out which are the best factors to gain exposure based on what we assess as the market conditions. And then we use factors to populate the portfolio of equities to give us the best opportunity to perform in that market scenario.
You say that you get the Canadian regulatory advantage here, but I mean, the ETFs in America are pretty decently regulated. So is that a big deal?
So it's not a big deal to have regulations in other geographies, but when it's at home in our house, we know them really, really well. They're meant to protect Canadian investors. They're really tailored for Canadians. And so it's that extra layer of protection. It's having our own regulatory body looking out for our investors that I think matters and has that incremental difference. The other thing, as an asset manager, what's important to us is we have the ability to more fully service clients with these products. Products that are registered in other jurisdictions, we have a much limited ability, and we shouldn't have the ability to talk about them and have the full support that we do with a product that has been fully vetted by a Canadian investor. Now we have the ability to fully service clients, update clients, keep them up to date, commercialize them in a whole bunch of different ways, but really allow clients to use them in their portfolios in a way that will work the best. If it's not regulated here, it's not covered here, we don't have that ability to do it.
I've learned to my cost in the past that any discussion of tax is dangerous because there's so many angles and so many details. But just tell us about, is there any taxation differences between buying one of these Canadian-listed ETFs and the U.S. equivalent?
And there are taxation differences. But as you said, everyone has a very unique, tax situation. Plus, is it registered? Is it not registered? Where do you hold it? So the way I describe it, if it's domiciled in Canada, the tax approach is often a lot more straightforward, much less complicated, and arguably much less risk versus something that's domiciled in a different geography where it gets a little bit more complex and a little bit nuanced on how it's actually taxed and what are the implications. So having it here makes it much more straightforward and a lot easier to understand for investors, which is always a benefit.
Because I think I have received slips. I don't have big U.S. holdings by any means, but with the word IRS on them.
Yes.
And I don't want that.
Yes, I don't want that either.
I never want to be on the IRS.
That's when you call up your tax person and say, I need help.
Yeah. So, because if you're buying a U.S. listed ETF, you can show up on the radar of the American tax authorities.
There are tax implications if you own U.S. assets, if you own U.S. securities. Absolutely. There are tax implications to Canadian investors if they hold those. That's why if it's held in Canada, it's a much simpler regime and much more straightforward.
Yeah.